Let's get into the ETF space. My next guest says US infrastructure is in poor condition and needs to be improved, and there's been some funds earmarked for its development. So how can investors gain exposure to this? Leung from Global X ETFs joins me now. First off, what needs to be improved? Is it just general roads, buildings, everything?
Yeah, that's a good question. So, before we dig into the investment case of US infrastructure, we have to understand the current state of the infrastructure in the US right now. And, a good reference point is a study done by the American Society of Civil Engineers in 2021. And what they found in that report was that they gave an overall rating of C- for the US infrastructure
Doesn't
at
sound
that
good.
point. Exactly, at that point. Now, that's on a spectrum of A to F, and what C- means is that it was in poor condition. So to give you better context, so in the report, what they found was that 43% of the roads in US was in need of immediate maintenance, and that's due to potholes and cracks and damages to vehicles. They also found that 7.5% of the bridges were structurally deficient. So what that means is like 13 to 14 bridges, one of them could be structurally at risk. And they also found what was interesting was that every day 6 billion gallons of water was lost due to main water breakages and leaks, and that's equivalent to about a half a month of Sydney water usage. So it's the state of US infrastructure is in a need for maintenance and improvement.
Yeah, well, a big country with a lot of people, which would obviously wear down the roads and the like. How can investors get a piece of this pie? Because I assume there is a lot of rebuilding happening.
Sure, so that's a good question. So in terms of rebuilding, there's actually a lot of tailwinds behind this as well, and it's coming from a lot of the US government initiatives. So there's a few, there's a large amount, but the key one is the Infrastructure Investment and Jobs Act, so the IIJA. This was passed in 2021, and that was actually the largest infrastructure bill ever in the US history, and that's about $1.2 trillion US dollars. So that's going to be allocated to bridges, roads, and water and sewage as well. So at the end of last year, about 300 billion of this 1.2 trillion was already allocated to projects, and the remaining has to be allocated by 2026. So what this means is that in the next few years, we are going to see more and more news of what projects are going to get this kind of money and what companies might be affected. A second one, which is worth mentioning, is the American Rescue Plan Act, or the ARPA.
Yeah.
This was also approved in 2021 and predominantly serves, it was predominantly a relief program for the COVID pandemic, but about 350 billion amount from that $1.9 trillion bill is allocated to water and sewage. So these two acts together, we're going to get over 1.5 trillion in investment in infrastructure over the next few years.
Okay, so there's an ETF for this, there's an ETF for everything. PAVE, I love it, PAVE. How do you get exposure? What's in this ETF?
Yeah, so interesting. So I think what we have to realize is that investing in infrastructure has moved on, and it's different from before. So traditional investments in infrastructure was predominantly on commodities and energy that drives the construction, and also on fixed assets, for example, like utility companies which have the cable infrastructure underground. So this has evolved due to innovations and technology advancements. For example, we're seeing raw materials. We have advanced composites, smart materials now. In terms of technology, we have sophisticated smart control systems and cooling systems. So in terms of the infrastructure development investment space, it's much more broad right now, and it's not just into raw materials and fixed utilities. So going back to your question about the investment opportunities, so Global X, US Infrastructure Development Fund, this ETF tracks the INDXX US Infrastructure Development Index. Now, the goal or the aim of this index is to create a portfolio of companies which benefit from the rise of US infrastructure activity. And one of the key selection criteria is that the companies within there must be exposed to construction and engineering, raw material and composites, infrastructure equipment, and also infrastructure transportation. And that goes back to what I was discussing about that broad scope that's required to invest in infrastructure.
So what companies are in PAVE?
Yeah, so that's, in terms of company, there's about 100 companies under PAVE.
Yeah.
And a few that sort of come to my mind. One that really interests me is Trans Technology. So Trans Technology is a climate control company. It's a climate control leader. And what they actually do is they design and manufacture HVAC systems. So HVAC stands for heating, ventilation, and air conditioning.
Yeah.
So as you can imagine, these systems are getting more sophisticated, smart cooling with AI and IoT development, and this has been driving the growth of Trans Technology. Another one that's interesting is Eaton. Eaton is a much larger company, and they're a power management company. So essentially anything to do with power management, they manufacture and design. And you can be finding smart grids, EV infrastructure, and also transportation equipment that requires power.